Figma is going public. Ticker symbol FIG. Target price range $25 to $28 a share, and recently increased to $30 to $32 per share. A good sign that people are hyped about this IPO. Why? Because Figma is not just another tech IPO. It's one of the most anticipated public debuts in years. This is the kind of stock that people have been begging to invest in ever since Adobe's $20 billion acquisition of Figma got blocked. And now, you might finally get your shot at investing in this great company. In this video, I'm going to break down everything that you need to know: share count, pricing, valuation, company financials, product strength, and whether this IPO is worth jumping into, or if you should just sit this one out. Let's first take a second to talk about why this stock is so hyped. Figma is one of the most beloved SaaS products in the world. It basically replaced Adobe XD and took over the design world by storm. It's collaborative, cloud native, and people genuinely love it. Designers, engineers, product managers, everyone uses Figma now. And it's not just cool, it's sticky. This is a classic recurring revenue SaaS business, which means predictable cash flow, high margins, expansion revenue, and a business model that Wall Street loves to slap high PE multiples on. Next, let's get into the IPO details. Shares offered, about 36.9 million shares total. 12.5 million are newly issued by Figma, and 24.5 million are being sold by insiders. Plus an additional 5.5 million share green shoe for over-allotment. Original price range was $25 to $28 per share, and it recently increased to $30 to $32 per share. While the final price is yet to be determined and will be determined a day before the IPO, this is a good sign that there's high demand for this IPO. For the valuation, let's just take the midpoint at $30 per share. This IPO should be worth, on a fully diluted basis, about $17 to $18 billion. Proceeds that are going to be raised for this company are upwards of $1 billion depending on the final price. Ticker symbol is FIG, and it's going to be trading on the New York Stock Exchange. Alright, let's talk numbers. For the revenue growth, 2024 revenue was $749 million, which is a 48% year-over-year increase. Q1 2025 revenue was $228 million, which is up 46% from Q1 2024. That's incredible for a company this size, especially given macro conditions. Profitability, in 2024, they posted a net loss of $732 million, but hold up, most of that was a one-time tax plus RSU hit related to a tender offer. In Q1 2025, Figma actually flipped to profit with a net income of almost $45 million, which means they're turning the corner. And you already know that Wall Street loves that just turned profitable SaaS story. Next, for the gross margins, 88 to 91%. That's basically best in class for software. Figma currently has 11,107 customers with an ARR of over $10,000. That's a 39% year-over-year growth. And 1,031 customers have over $100K in annual recurring revenue, which means that enterprise traction is real. They have over 13 million monthly active users, and they're used by 95% of the Fortune 500 and 78% of the Global 2000, which means this isn't a startup anymore. This is a mission-critical tool for most major companies. This is where a curveball gets thrown in, which could be a major positive or maybe a negative, depending on how you look at it. They own $69.5 million in a Bitcoin ETF and another $30 million in USDC. They've said they intend to convert that to Bitcoin as well. And yes, they've authorized something called blockchain common stock. No plans to issue it just yet, but an interesting side note to this stock. This adds a little volatility and a unique edge to the story. Not a typical SaaS move, but definitely interesting to say the least. Let's talk about the risks for Figma. There's a few, but this stock is very competitive. The only major risk I see would be AI design tools like Framer and possibly even Canva. Macro headwinds and foreign policy could limit growth, and insider selling on IPO day could be a limiting factor. CEO Dylan Field is cashing out some shares, but overall, nothing to be too concerned about in my opinion. This business has a strong moat, momentum, and margin, and most importantly, a product that people love using. Now, let's talk a little bit about my expectations about the performance of this IPO. Historically, IPOs with hype and strong unit economics tend to pop on day one, but many outperform the S&P 500 in the 6 to 12 months after, as the hype and momentum wear down a bit. Think Instacart, ARM, even Reddit. All saw pops at the beginning and then cooled off for a while. Do I think Figma is going to be any different? Well, it has a few things going for it. Number one, real profitability. This company generates a lot of revenue and they're just turning the corner into turning that into profit. And I only see growth for that ahead. Number two, strong enterprise expansion. There's only going to be more companies that start using Figma, and as more companies use it, that means more dollars in Figma's pockets and for its investors. Number three, healthy SaaS metrics. If you look at the metrics for Figma, they're best in class for any SaaS company. Number four, users legitimately love this product. And number five, this company has a clean growth story. Ever since it came to market, all the way till the Adobe buyout fell through, people have been wanting to invest in this stock. And now, you finally get your opportunity. But also, a few things to keep in mind that are concerns. Number one, this stock is not cheap. The valuation is definitely high, but considering its revenue growth, margins, and the runway that it has ahead, I think this valuation is justified. Number two, the Bitcoin exposure could definitely add some volatility, especially if we see a bear market in crypto sometime soon. So that's something to keep in mind. And number three, with AI ramping up a lot recently, this company could face new AI-powered competition. But again, this is something that remains to be seen. In my opinion, this IPO will probably pop right off the bat. Whether or not it holds will depend on how they deliver across the next 2 quarters. For some context, this isn't just a Figma story, it's a macro story. The IPO market in 2025 is on fire. Over 116 IPOs have been priced through July, and with proceeds of over $17 billion to these companies, that's a more than 50% year-over-year increase. And some of these names are going crazy. Circle raised over $1 billion and became one of the best performing IPOs ever. Figma is entering the market right as demand peaks, and that's a tailwind that you shouldn't ignore. Let me show you how I break down IPOs like this. Number one, I look at the share structure. New shares equals company raising money. Existing shares equals insiders cashing out. Number two, always focus on fully diluted valuation. Always check for options, restricted stock units, etc. That's the real market cap that you'll be buying at. Number three, zoom in on revenue growth versus margin. Figma's 50% revenue growth with 90% gross margins is A+ territory. Number four, study their unit economics. Expansion revenue, high dollar accounts, retention rates if disclosed. Everything looks good here for Figma. Number five, watch for IPO timing and lockup expiration. Volume and insider selling can make or break early performance. And number six, compare to comps. Look at companies like Snowflake, Datadog, Confluent. These stocks command high multiples because of the SaaS growth. My final take, should you buy the Figma IPO? Well, if you're looking for a high growth SaaS beast, strong brand and loyal user base, enterprise upside, and clean fundamentals with day one profitability, then Figma's IPO is absolutely worth watching. But remember, the valuation is already rich, sentiment is running hot, maybe a little bit too hot, and the Bitcoin exposure adds risk depending on how you look at it. So don't just chase hype. Have a plan. You could wait for price discovery post-IPO, scale in slowly, or sit out until earnings give more clarity. But whatever you do, don't go in blind. I know it can be tempting to just jump into this IPO because of all the hype that IPOs have seen in 2025, especially following up from the Circle IPO, but it's definitely good to have a long-term plan before you jump in. If this video helped you understand more about the Figma IPO, please give this video a like, drop a comment if you plan to buy shares, or whether you want to sit it out, and make sure you subscribe to the DocuWealth channel for more helpful finance content like this. And if you haven't already, click the video that's on the screen now to watch my previous video about dollar cost averaging versus lump sum investing, where I explain the pros and cons of each approach and which one is better overall. The answer might surprise you, so watch the video if you want to find out.